Hello everyone, my name is Sriram Iyer. I'm an analyst at the Commodity Research Desk at Reliance Securities. Welcome everyone to this week's Bullion podcast. So, international and domestic gold prices are on their way for the third straight weekly gains lifted by the safe haven appeal for the yellow metal. Domestic and international silver prices are also rose for the second straight week, tracking strong gold prices this week. It was all about safe haven appeal or safe haven trade this week. Prices rose this week as fears about, surrounding the Russia-Ukraine conflict boosted the safe haven appeal of the yellow metal going forward. Market got a flight to safety even as equity markets sold off this week. US stock indexes continued the slide on worries over higher interest rate situation in the US, and after US warned Russia might create a surprise pretext for an attack on Ukraine going forward. Meanwhile, prices also got a lift amid speculation amongst investors and traders that further escalation of tensions between Russia and the West concerning the Ukraine situation could deter the Federal Reserve from raising rates by about 50 basis points in the month of March, where the most of the markets have already factored that in. Additionally, prices also got a lift from a slightly dovish Federal Reserve minutes this week, which showed that Federal Reserve officials last month agreed that with high inflation and employment, even though remaining strong, it was time to raise interest rates. But at the same time, they added that any decisions would depend on meeting by meeting analysis on inflation and other data going forward. So again, this was slightly deemed as dovish by the investors and traders, which continue to lift the bullion side of things this week. Looking ahead, we feel that the main trade again will be surrounding the rising tensions between West and Russia over the Ukraine situation. US President Joe Biden said this week that there was every indication that Russia was planning to invade Ukraine. Tensions of course escalated this week further after Ukraine forces and pro-Moscow rebels traded fire in eastern Ukraine late this week. Meanwhile, markets could also look ahead to the FOMC meeting in March. The latest FOMC minutes, as I mentioned earlier, did not offer any fresh hawkish minutes, and investors will continue to assume that the Fed will take decision on a meeting by meeting basis, with the Fed March meeting coming up very quickly, and that will be based on the inflation and unemployment data going forward. So data on the next week with the main key trigger from PC price index, which is the Fed favored inflation gauge, will be the key trigger point for the markets looking ahead. Of course, we have the US GDP data as well, which could also move the markets and probably influence the Fed going forward. So I think pretty busy calendar week for gold. Of course, the US is shut on Monday due to the President's Day holiday. So over the weekend, we see markets remaining range bound going forward. But the main trigger will be the PC price index and the US GDP data ahead of that March Fed meeting. So all eyes will be on that. But of course, if tensions do escalate in Eastern Europe, then we can see that investors will continue to remain buyers of the safe and yellow metal and the white metal as well. So I think markets bias will be slightly on the positive side, but some profit taking cannot be ruled out. But profit taking can be met with good buying interest going forward in the next week or so. Technically on the charts, we feel 1916, 1940 will be the resistance point for the markets next week. And a trade above will push prices towards the 1970 level. But if the markets move back below the 1880 mark this week, if it settles below 1880 this Friday, then next week markets could retest that support zone of 1855 to 1835 next week. On the domestic side, on the upside, we feel 50,500 and 50,700 will be the key resistance point going forward. And a trade above or a settlement above next week will push prices towards that 51,300 levels, which will be the main resistance point for the metals going forward, or for the domestic gold prices at least. If the markets close below 49,900 today, then markets could move back to that supports of 49,350 to 49,400 going forward in the next few days. Again, markets will be extremely range bound and could remain within this trading band which I mentioned earlier. On the silver side, the resistance point are at 23. Support points are at 23,240 and 22.690. And on the upside, resistances are at 24.175 and 24.500. And markets will remain within this resistance zone and support zone looking forward and then into next week. On the domestic side, March support, MCX March contract support are at 62,590 and 61,520, and resistances are at 64,665 and 65,670 for the next week. So that's it from our side. Thank you for listening. Have a pleasant day and a week ahead. Thank you.